Great. Many thanks for your patience, and I think we have enough people here to get going, and we're very conscious of that you're busy people and want to finish on time. So let's get started. My name is Gareth Lodge. I'm your moderator for today's session, Instant Payments, a Global View, brought to you by Volante Technologies. We're going to do a few bits of housekeeping first, and then I'll get our panelists to introduce themselves, and then we'll get right down to it. First of all, we are going to be recording today's session, and shortly after it finishes, you will be sent a link to that recording for you to go back and look at the slides again, or pick up on particular points, or of course to share with your colleagues. We will also be taking questions as we go through today's session. As you can see on the web GoToWebinar box, there's a tab named Questions. If you want to write your question in there, it will send it to us, and we will answer as many questions as we can at the end of the session. We've got a lot of content to actually get through, so I'm afraid we don't think we'll have time to take questions as we go along, but please do ask as many as you like. We'll do our best to get through them, and of course, I'm sure if they're pressing or particularly difficult ones, our hosts at Volante Technologies will be delighted to address them. So let's get on to today's session. I'm really excited to be presenting this. We've got some great speakers who have got some really interesting things to tell you. So if nothing else, I'm looking forward to hearing their presentations, and I hope you are too. I'm going to ask each of us in turn to give a short introduction about ourselves, who we are, what we do, and our interest in real-time payments, because I think that will also whet your appetite, because it's an interesting mix of people in different journeys and bringing quite different perspectives to the table. I guess, as I suggested, it's for me to go first. So, my name is Gareth Lodge. I'm a senior analyst at the research and advisory firm Volante, and I focus solely on payments. I've been in the payment space for getting on for, I guess, 2 decades now, and I've got a wide range of experience for many different payment types. For this particular session, I guess the most pertinent things for you to know is at one of my previous employers, I used to work and help design and win the UK faster payments bid. And for one of my clients, I helped them win and design the Australian real-time system. Amongst other things, I'm working with clients, be they banks, integrators, technology providers, or end-user customers, looking at real-time payments in over a dozen countries. So I've been looking in and around real-time payments getting on for 15 years, and it's probably no more exciting time than ever before than today. So I'm really excited to talk about today's topic. I'm now going to turn to Marco Hughes from HSBC and ask if Marco, if you could give us a brief introduction about yourself, please.
Thank you, Gareth. So I'm Marco Hughes, and rather like yourself, I've been in the payments industry some 20-odd years now. Presently, I'm the global product head for core payment solutions in HSBC's liquidity and cash management business. In that, I cover about over 50 countries across Europe, Africa, Asia, the Middle East, and the Americas. And so what that actually means is looking after the products we use to meet clients' needs to make and receive payments both domestically and internationally. And that ranges really from the latest mobile and virtual solutions to the traditional electronic and even the paper-based solutions that our clients need, but also a bunch of stuff that we build around that to enable clients to better manage their payments and liquidity positions.
Perfect. Many thanks, Marco. Our next speaker then would be Carl Slabicki from BNY Mellon. Carl, if I could ask you to do the same, please.
Sure. Thanks, Gareth, and hello, everyone. My name is Carl Slabicki, and my background is a little bit different. I was actually a corporate practitioner for approximately 10 years, working as a treasurer for in-house bank shared service center for the Worth Group, managing their treasury operations. And joining BNY Mellon about 3 years ago, I've been solely focused on building out our immediate payments product line. which is focusing on our strategy around how we develop, build, and deploy to our clients some of these new solutions, specifically around real-time payments and our tokenized payments with Zelle product.
Great, thank you. And last but certainly no means least is Nadish Ladd from our host, Volante Technologies. Nadish, please.
Thanks, Gareth. Hi, everyone. This is Nadish, and I head Volante's payments function. My background is about 20 years. I have been in the payments industry, starting with checks and then later on transitioning into electronic payments, working for organizations like EY and Citi, where I was looking at the design and functional domain expertise around the payment space. Thanks, Gareth.
Great, thank you. So I hope you see that we've got some really interesting perspectives here from a range of people with different starting points and perhaps different goals. And so that should give us some really quite interesting insights. But just to make sure we're all on the same page about what we were thinking about when we put this webinar together, I'm going to spend a few minutes just sharing a few perspectives and perhaps setting the context about why we think this kind of discussion is a remarkably powerful one, and something perhaps you should be thinking about doing, not just today, but more broadly going forwards. So I'm going to start with the kind of the almost obligatory list of countries that have got real-time systems, and this is by no means a complete list. This slide is perhaps slightly different than many you might have seen before, in that it's trying to show that there is a trajectory around real-time payments or instant payments, and that it is perhaps accelerating. We go right back to 1973 with Japan and the Zengin system, which was the first certainly that we would recognize as an instant payment solution, through to those countries that are going to be launching in the next 2 or 3 years, either going live like the US and Australia, or those that have only really just started their journey, like Hungary, the Netherlands, or Spain, or many other countries. But wherever you are on that journey, I think it's safe to say that there are plenty who've gone before you in terms of their experience, about the things they're doing, how they've gone about their process. And I guess that's the most interesting point here. For those of you who are joining who are in countries that are only just undertaking their journey, there are plenty of countries to refer to understand what they are doing, why they did it, because payment systems are often a product of the driver to create them in the first place, whether it's markets or regulation, their culture, their history, what are the payment systems that are in those countries, or even how those payment systems are used themselves. So there's a lot to learn if you're relatively new to the kind of instant payments world. But at the same time, if we look at the left-hand side of the slide, a lot of these organizations or countries have started their journey very early on, and it would be foolish to perhaps think that they are still using exactly the same technology in the same way, and they haven't developed over the years themselves. If we look at Switzerland way back in 1987, 30 years ago, they are now on their 7th generation of their instant payment solution. So I think as we look at a number of these countries, they're actively looking at how they will develop their real-time solution going forward, because as something new comes along, there is something new we can learn from that. These are evolving solutions that are going to continue to evolve over the next 2, 5, 10, 20 years' time. We just have to look at the UK plans, for example, which has not only changed the value limits of transactions, but are looking at moving to an ISO 20022 message, and are actually looking at folding how they process the payments into other payment types as well. The one thing we can be sure of is there is change. So whether you're an old hand as well, there is interesting topics here to be learned, and perhaps apply those learnings about whether you do that or perhaps don't do that in your future system developments. And it's interesting how that has changed even over a relatively short period of time. So I'm just using here how payments are cleared, posted, and settled as an example, with systems that are ranging from 40-odd years, the Zenkin system, although this of course is a more recent versions, through to actually the most recent system here, faster payments. And I guess that in itself is quite interesting. Faster payments is often quoted as the kind of the big successful system, but and one of the older players. But compared to these, it's relatively newcomer. So you can see how these systems have developed to do with their particular markets and how they have learned. But looking forward, would we adopt any of these systems if we could start from scratch? Probably not. We probably would take bits and pieces from each of these systems and do something new as well. For a start, we would start with a central bank that operated 24/7 as an example, and get rid of some of the shadow banking and the late settlement window challenges. We would perhaps look to Mexico and have a batching of payments before they are settled to help that liquidity and throughput. Or perhaps we might look at the UK and look at their rules that trigger that will trigger additional settlement windows as and when they are required. So even something like faster payments, where it is very well thought through, perhaps taking those lessons from previous systems, is this going to change going forward? And it's not just the infrastructure, it's not just the kind of the back end stuff, it's how the customer experience, the use cases, how you leverage real-time payments that is equally evolving. And there are unique cases and ways they are used in each and every country going round. So they are worth looking at. I think we are perhaps ticking off many of these boxes, as you can see from the chart. I think we are doing well in when we're launching systems about explaining the benefits of a faster payment system, about being able to move transactions quicker. I think we've certainly got to the stage now where most real-time systems are being developed to operate 24 hours a day, 7 days a week. We're creating those overlay services that make many of these real-time systems even more attractive, using aliases such as a phone number or an email address, for example. Yeah, there are probably still some places still to go. There's probably, as we've mentioned on the settlement piece, some benefits for not just faster settlement for the banks, but allowing corporates who are doing many of the transactions themselves to have faster settlement, or perhaps settlement in the main systems. And certainly around the enriched data, that is certainly something where we can all benefit. And I bet a number of us on the call will be looking very closely what's happening with the MPP system in Australia, where there are different flavors of remittance data that's going to be embedded in the transactions, and what business cases and what use cases are built on top of that. So that's why we've pulled today's panelists together. They have different perspectives, different starting points, and different experiences. And it's that we want to share with you. And so let me turn to our first speaker, Marco Hughes, and ask him to share some of his experiences he's going through HSBC. Marco, over to you.
Thank you, Gareth. So why the buzz around instant payments? So we know the digital economy and the rise of mobile banking has provided a strong platform for instant payments, with an expectation that decision-making should be done on the go, so to speak. And professional life is now expected to echo that consumer experience. And we've had the exponential growth of smartphones, which really has further nurtured this expectation. But also we see regulators pushing for these schemes, predominantly to reduce the use of cash, but also help tackle financial crime and fraud. And equally, regulators looking to provide greater access to payment services for underbanked or unbanked consumers as a means of social inclusion. And over time, and you've seen from Gareth that timeline, the features of these schemes have matured and become increasingly connected to the digital economy. So, for example, in Europe, the imminent implementation of PSD2 alongside the launch of SEPA Instance will provide a strong impetus to opening up and regulating that digital economy in Europe. And this development of overlay services and direct access to non-bank participants is really opening up the possibilities of using instant payment infrastructures in an economy where I guess the end user is looking for speed, certainty, convenience, and security in their everyday transactions. So let's have a little think about some general use cases for instant payments. I mean, once you have this infrastructure in place, the real debate we're seeing lies in the solution and the use cases that are available. So I thought I'd come across, with just some general pointers that we've experienced globally before coming on to a specific example. So we see that for consumers, speed is not the only consideration. They're looking for ease of use, and certainly an ease of use that's comparable to cash, without the need for the merchant to know the account number of the beneficiary. So really the form factor of how consumers avail of themselves of the scheme is important. Of course, costs must be competitive and the solution secure. And a view, I guess, is that potentially it does help if the regulators in a country nudge behavior away towards these schemes, and it's not just early adopters, I guess, like those of us who are on this webinar who adopt it, but to help fast track those behavioral trends to a new ecosystem of payments. And certainly we saw this in the UK with the adoption of faster payments, and also more recently with India with UPI. For corporates, I think the priority really is to provide option for their customers in line with their growing expectations, to strengthen their own brands and social image, whilst ensuring, from a treasury perspective, that instant payments are cost effective and provide a real alternative to existing models. As mentioned previously, ISO 20022 XML format we really see as key in many markets. The availability to provide added benefit to corporates from a data perspective, and value-added services building on artificial intelligence and efficiency and data mining are really the next steps in developing business models for our clients to further strengthen their relationships. But importantly, it does come with some overhead. So for corporates to adopt real-time solutions built on instant payment platforms, it's actually an organizational change for many corporates. They must take into account the fact that a lot of these schemes are 24/7, 365 service, and that's the kind of expectation their end users will be expecting from them. It's not just the banks, and it's not just a simple plug and play. And of course, security and fraud, because everything's a lot quicker, is very high on the Treasurer's agendas of many of our clients. And their expectation is that these schemes have to provide the right protocols to protect them and their own customers. So really, in summary on this slide, instant payments have a lot to offer our corporate customers. There's a combination of speed of credit, irrevocability, better reconciliation, ease, and convenience of use. Really, it's the key to providing a genuine alternative to established models. Now, to bring this to life, I thought I would talk particularly about probably what I've seen as one of the best use cases in recent years, which will be India's UPI scheme operated by the National Payments Corporation of India. And it's really how they've managed to link mobile phones into instant payments. And there have really been 4 success factors that I pull out in relation to it. The first is having an infrastructure in place and having the right conditions. In India, there's something like an 80% mobile phone penetration. There's something staggering like over 1 billion mobile phones in the country, and over a course of those, 250 odd million of them are smartphones. And this has really laid the foundation for consumer usage of mobile and instant payments. Then there's regulatory reform. The Indian government is implementing a number of initiatives to ease access to bank accounts to the wider population and enhance the digital flow of transactions and communications. But really, I think one of the nicer things about it, and has been key to it, is the use of aliases and non-proprietary or open apps for the use of phones. So this is really what makes UPI transformational. It's the ability to give the end user on the high street an app that can access different bank accounts, and they use a virtual payment address, which I always like to think of as a bit like a Twitter handle. And the users at either end of a transaction can avoid disclosing actual account details, and they can operate payments and actually request for payments 24/7, 365. So the success of instant payments really has been encapsulated, I think, in India. They've got a very simple platform, but it's convenient, it's interoperable, and a single app that a customer can download can link multiple bank accounts across banks. Of course, they can download ours, but they could also use others. And that's really been a great success to the model. So with that, I'll hand over.
Great. Many thanks, Marco. Some interesting things in there, and certainly the Indian region is something that fascinates me, the amount of change and development that's taken place there in such a short period of time. I think we'll probably have a number of questions around that, if nothing else. So what I'd like to do now to make sure we do get a chance to take those questions at the end, and again, I would encourage you to send those questions through using the panel on, I suspect, the right of your screen, is to ask Carl if he wouldn't mind now doing his bit of his presentation for us, please. Carl, over to you.
Sure. Thanks, Gareth. Appreciate it. And hello again, everyone. So on the following slide, I'll give you kind of a quick background on BNY Mellon's view of the changing landscape and where things are within the payment industry today. Echoing, some of Marco's comments, we see this kind of being driven from a number of different factors. On a global perspective, and then what we see in the U.S. is kind of echoing what we've seen in other countries, and what I think we're going to continue seeing some of those that haven't made these jumps yet in terms of their payments infrastructure. But it kind of starts with what you and as an individual see in your everyday life. As an individual, picking up your phone, being able to FaceTime someone around the world, or order something to be delivered within an hour or so. And yet, when it comes to the payments model, in most markets in the world, not all of them, because certainly some of those, such as Singapore, UK, and certain others have already gone there, money movement is the last piece of the puzzle. And the settlement and the timeliness and the experience around that is still pretty stagnant. And advancing technology, and when we look at the history of the U.S., for example, as a payment system, and you look back as to when wires and Fed telegraphs first came out in the early 1900s, and the advancement of cards in the 50s and 60s, and ACH back in the early 70s, technology was really being utilized within the U.S. in the payment space. Cutting edge technology at those times, when you were using a Sony Walkman and a walkie-talkie, and Atari Pong was the really cutting edge stuff back in the 70s, and ACH was moving, that's pretty keeping pace with what people were doing in their home lives. But over the last 40 plus years, especially in the U.S., there's been this really boom of exponential growth in capabilities and technologies, and payments really haven't followed. So what we've seen is this burst of competitors that have come into the space to address those problems. And there's a number of challenges along the payment system across the board, whether you're talking about wires, ACH-like systems, the BACS system over in the UK, ACH in the US, these kind of batch and forward systems, paper processing, obviously, as many of everyone knows the challenges associated with checks, even cards with some of the costs around the interchange and the merchant and the access model to some of those. They're each of these systems, and then Gareth made this point earlier, is imperfect in some way. So if we were going to the drawing board today with starting from scratch, we wouldn't design probably anything like one of the existing systems today. So it really gives us a chance to kind of start new. And I think this is being brought on by regulators who've been pushing certain industries. In certain countries, we've seen mandates come through where it makes sense. If there's a small number of banks that can really attract and capture the large market share. We've seen mandates be very successful in certain countries. In the U.S., we see it going a little bit more organically, where the Federal Reserve is playing a more supporting, convening role and asking the bank and the banking community to do something on its own, which we're seeing with the clearinghouse and their real-time payments effort. And obviously, the U.S. has certain challenges of its own with the number of banks that are reachable. But what we're seeing is this response to competition from a lot of non-bank payment providers who've entered the market because they've offered great solutions such as merchant solutions, person-to-person solutions, all outside of the banking sector because they've focused on the client experience. They've provided easy access, a great client experience, and have leveraged other items that are maybe imperfect behind the scenes, such as ACH or card or things like that, and have been able to really just get that benefit out to the client. So what we see is, the Federal Reserve, other regulators globally really pushing the envelope forward, saying, hey, the global economy is moving to a truly real-time 24/7 through 65 environment. We need to be able to offer a safe, reliable, secure way for individuals and businesses to transact. What we have is not sustainable from a speed, from a capability, and from a security standpoint, and we need to make this change. And what we're really trying to focus on, and what I think items like real-time payments, like Zelle, like Australia's new payments platform, what a lot of other countries have rolled out in Singapore and UK and Poland and Chile, is that we're moving in that direction. We're trying to address the risk associated with some of these legacy payment systems. We're trying to drive down the cost that it is to the banks and the processors of these payments. The timeliness and the transparency around it is one of the biggest items that we see with our cross-border payments today. Being able to send money around the world and seeing where that money sits. Who has it? What's the status? Where are the fees being taken out of? And getting some transparency into that. And even on a domestic level, that's still lacking. And the payee information, trying to add security around that, using aliases, using tokenization, and making that secure. On the next slide is kind of how we see all this shaping together from a client delivery standpoint. So we have a number of different things coming into the market now. We have real-time payments in the US. We have real-time payment-like systems in 30+ countries globally. We still have the legacy systems, which are not going away. So we still have these batch and forward processes. We still have the wire platforms. We still have card capabilities. We see certain telecom providers providing payment services in some of the other developing countries. You have the abundance of now Swift GPI, which is launching, and some of the tracking and SLAs that Swift is bringing into the market. And we feel at BNY Mellon that this trend is going to continue. We don't see this as a consolidation to one super payment type and one super network. We actually think that this trend is going to continue, and there are going to be more options and more networks, and it's going to do two things. One is it's going to provide extra speed, it's going to provide transparency, it's going to provide lower cost alternatives, and it's going to provide a lot more options. And it's going to be those that understand it and can take advantage of it that can benefit from it and let their clients benefit from it. So we see a shift right now going on because of all these different options. If you think about a U.S. corporate treasurer, typically when you go to make a payment, your options historically have always been check, ACH, or wire. And maybe card is a fourth option for some. And it's been fairly simple, fairly straightforward. But now you have same-day ACH, you have real-time payments, you have Zelle, you have virtual cards. When you're talking cross-border, those numbers really just exponentially grow depending on what currency and what country you're talking about sending those funds to. So from a bank standpoint, We view this as the shift from not selling products, but selling services. Getting away from an ACH-like solution, a real-time payment-like solution, a wire solution, and making it a payment service and breaking down the payment methods and channels into those features. And we always draw the parallel to, shipping a package. If you want to get something somewhere, you pick the speed. Maybe it's 15 seconds, maybe it's end of day, maybe it's tomorrow, maybe it's next week. Do you want insurance on it? Meaning, do you want finality of that payment, or do you want a right of return? What type of information do you want to travel with that payment? What do you want to use? Do you want to use an account number, or do you want to use an alias or a tokenized service? And allowing banks and the service providers to break down those services, make that available to the client, have them use that to drive the payment, and then use the banks to determine where and how that payment should move. What networks are going to be utilized? How is that going to go? We've seen this in the phone companies. When you travel abroad and you go to call home, you don't pick the carriers that you're going to connect through. You pick up your phone and you press the button just like you always would at home. And the phone companies do the routing logic and make it go behind the scenes. That's where we see this really going from a product to a service model. And it's really because now all of a sudden there's more options. And this is the new way in which we think that clients and corporates are going to want to interact going forward. So that wraps up for that slide, so I'll turn it back to you, Gareth.
Great. Many thanks, Carl. So now to our last speaker before we turn to questions. And again, encourage you to put questions through. We'll get there eventually. Nadish, if I could ask you if you could step up to the mic and lead us through your few slides, please.
Thanks, Gareth. What I have attempted to do here is we are trying to provide an implementation perspective on what Volante's experience while implementing these real-time instant payment solutions is across a multiple section of banks for whom we are implementing. So what we are seeing is a few set of challenges. First and foremost, it has been around the business case justification for a particular bank to decide to offer this as a service. In the US, for example, we are seeing banks having to, based on their size, volume, having to make decisions on whether to take direct membership of the TCH or go through one of the bigger banks. The UK already has a similar model with the bigger banks providing the membership and liquidity for a direct scheme membership. So in some banks, it has been difficult to get a business case approved. And that is why it is quite important for a bank to identify what sort of a model they want to take. The other few challenges have been around legacy platforms. A lot of the platforms within the bank, let alone the payment engine, surrounding platforms have been batch-based. They are used to files, and it is important for the bank to look at when you are doing this decision of build, buy, replace, modernize. It is quite important to identify the entire chain of platforms which are going to need to change. This is down to, say, for example, your liquidity management systems have been typically operating at an end-of-day settlement model. Now you're talking about multiple settlement models through the day, real-time tracking, and so on. So it is quite important to analyze the end-to-end journey, starting from your channels down to the last system, down to your gateways, and identify all the touch points and make sure that we are able to cater for those. The other important aspect what we have seen is around ISO 222, as Marco pointed out. That is becoming a de facto standard. A lot of the schemes are using this. However, there are regional variations. Different schemes are tweaking the message formats, and it is important, especially if you are a global bank, as in Marco's case with HSBC. What is important is that a single ISO 222 standard based model is not going to work across multiple countries. You are going to need to overlay it with the regional variations. So these are some of the technological aspects we are seeing that have been considered and have created issues as we go through the implementations. The other important thing is, I think, as Marco pointed out, the fantastic example of the use cases. And it is quite interesting how the use cases have been approached. I think Carl had mentioned once about how the US looked at the B2C as a primary use case when they started planning the TCH real-time payment scheme. Whereas UK FPS, for example, had looked at a completely retail P2P use case. So as we go through these journeys within the country or globally, what we are seeing is the use cases are evolving. And as a bank, as a technology provider, you have to be in constant touch and make sure that these use cases, as they evolve, you try and adopt and cater and plan for those, because they are going to come down the line at some point of time. So here are some of the things we have put down as planning for success. So one of the first things we realized is that there are going to be some changes once an implementation of instant payments or real-time payments is done in a particular country. There are some message tweaks, or there are some additional features which get implemented down the line post-implementation. So one of the things we have seen is you don't want to be caught without a budget to implement such changes. So at the time of planning a budget, we have to consider that down the line there are going to be some changes. So have those plans included in the budget. The second is what both Carl and Marco referred to about tokenization. This is going to happen. Today, there are schemes where it might not be present, but this is your chance to design or implement systems which enable the tokenization aspect. Again, as Marco pointed out, the India use case was fantastic. They introduced it upfront, and even if there are other schemes today which do not allow it, it has to be catered for. Remittance information that Gareth pointed out early, additional information to be sent with the payment, that is going to happen. So it is very important that as a bank goes through its implementation of real-time payments, they have to keep these future things in mind. This is basically your chance to effectively modernize your payment platforms. This also includes getting in PSD2 open banking APIs into the mix, because real-time payments offers the mechanism of getting the payment from the originator to the beneficiary. But open banking APIs, PSD2 is enabling the payment to be initiated instantly across multiple host of channels. Gone are the days of just sending files and then having the payments go through. This is open banking tied together with real-time payments is what is going to provide the end-to-end user journey. So what our thought process around this as we go through the implementations is, that stopgap solutions, trying to patch systems, getting them to work and implement real-time payments is going to be difficult. You have to think strategically. You have to think of all these factors: tokenization, additional remittance information, open banking, APIs, and consider these as a whole end-to-end proposition. Without that, just implementing or taking membership of a scheme, a real-time payment scheme, is not going to provide the benefits to the customers or the bank. It has to be thought of from an end-to-end perspective. So these are some of the things that we have been seeing in the market. Over to you, Gareth.
Perfect. Thank you, Nitish. And I guess that then brings us to the Q&A part of the session. We've had a lot of interesting questions, some on a theme, one or two very, very specific. I feel as if I might be sitting a test in some cases. Now, some of them will be in for Nitish, but let's give him a few moments to catch his breath, and perhaps let's turn to Marco with the first question. And I guess there's been a number of questions we've got through around India and some of the things they're doing. So perhaps briefly, is there one thing you've learned from all the work you've been doing in India that you think could be relevant to other instant payment solutions around the world?
Well, yes, thanks, Gareth. I think the one thing that I take away with regards to India is actually how it's changed the business models of some of our corporate clients, and also how consumers use it. Certainly, if you sit in the UK, you can get quite stuck in your ways, and you always assume the way forward will be things like direct debits. But in countries where that doesn't exist, what actually real-time payments has enabled is things like real-time collections. So scenarios where our clients have always operated cash on delivery of goods. This experience you might have in the UK of, you pay in advance on your card and the Amazon delivery person turns up with the goods, doesn't exist in other markets. But we've enabled solutions where the delivery person, instead of accepting cash, can just pull out their iPad and fire off requests for payment, and you receive it on your phone, and the payment is made. So it's really that request to debit functionality is just a very interesting nuance that, in certainly a lot of the emerging markets in the Far East, we'll see a real increase in e-commerce that didn't exist before.
Perfect, thank you. So one of the very specific questions we've got is asking about the Bahrain real-time system, which I'm sure everybody on the webinar wanted to know about. But in all seriousness, I think it's an interesting solution. It's called Fari Plus. It's part of the EFTS system, launched just over 2 years ago, I think it is. And it's actually a lead into my next question to Carl, because it has many attributes that would be counted as a real-time system, although perhaps it doesn't give value in as near real time as many other solutions, around 30 seconds, for example, which kind of then starts to highlight the question about what is or isn't a real-time solution and how close do they have to be. And then that leads into a discussion around interoperability. And Carl, you made a great analogy in your section around, one day you should be able to pick up your phone and just dial and it should work. How it works in the back shouldn't matter. So I'm curious as to how you feel that might work on both how or what kind of challenges we might face on a cross-border basis, or as we look to the US, where there are at least 2 real-time systems going to market, how you start thinking about that as a bank on what you might need to do.
Yeah, it's a great question, and we've spent a lot of time talking and thinking and planning around that exact point, which is, what is real time? What does that mean? And the term real time gets thrown into a lot of different networks, use cases, and scenarios where it's not really real time when you look behind the scenes in most cases. Real time can mean a lot of different things to a lot of different people, whether you're talking about person-to-person payments, business payments, or if you're coming from a bank's perspective, a network operator. There's availability to the end receiver, there's notification to the sender, there's settlement all the way through the system, there's notification to the receiver, all these different points. So when you're talking about person-to-person payments, the term real time gets thrown in a lot because as soon as someone sees an email, they think it's done. Meanwhile, the money may be moving a day or two later. When you're talking about a bank or a regulator's perspective, they're looking at the liquidity risk in the middle of that whole process. And when is that money actually moving between and settling between financial institutions? So real time, to me, is, should check all those boxes. Real time should provide instant availability to the receiver. It should provide instant notification and transparency to the sender that has been applied. It should provide instant notification to the receiver that funds are available. It should provide instant settlement all the way through, including the banks involved in the process and at the central switch, whatever that is, depending on what scheme you're talking about. And I think that's the model that real-time payments is taken here in the U.S. It's close to the model that we're seeing in a lot of other countries. When we look at global real-time payments, that presents actually some challenges. There's been a couple industry groups that have started conversations about taking this to the next level, which is, sending money from Australia to the UK, from Singapore to the US, you leveraging these global real-time systems. And what we have is a mix of RTP systems that are very similar in a lot of ways and very different in a lot of ways. So if you have one system that operates on a 15-second SLA and another system that operates on a 2-minute SLA, how do you reconcile that, and then what does it mean? And I think that's going to be a very complex situation, and we're going to have to address that as a global market over the course of the next few years. It won't be that quick, but how are the SLAs are going to work? How is the governance going to work? And how can we keep that bar set very high in terms of speed, transparency, and availability to really make it a value for global real-time payments? Because that is the next step. I think we're going to have to chew through a lot of those details when we go network to network, because it is going to get very complex.
Quite agree. And I think what's interesting is we as payments professionals are thinking about it purely in terms of, perhaps not purely, but perhaps primarily as our starting point as payment rails, but as Marco said in his section, this is building the platform for the digital economy. And if we think about it with what's best for the digital bank going forward, it gets a degree more complex still further. And so perhaps, Nadish, if I could ask you, that related question to build on that, how does instant payments link with things happening in Europe that are trying to create the digital economy, like the PSD2 and the various open banking initiatives that we're seeing?
Thanks, Gareth. Yeah, as I mentioned, what we are seeing is this end-to-end journey, because what Carl rightly pointed out, underneath the rails, money is moving at, could be moving at a different place, but the perception of the initiator or of the beneficiary is happening around your channels. Your touch point, your actual touch point is essentially your channel. And now opening it up and tying up the initiatives like PSD2 is going to be, I think, key from a consumer, from a user experience point of view, that I could be shopping on an online retailer shop, third-party provider, essentially what PSD2 is providing, and being able to initiate a payment, real-time payment there. So that is what that is where we think the whole potential of real-time payments is going to be fully utilized. The ability for a consumer to allow parties to initiate payments and get a real-time status update, real-time information on the success or the failure of a payment is going to be a key factor. And that's where we think that it's implementing a real-time payment is not going to be just replacing your payment engine or replacing your payment hub or replacing settlement, your liquidity systems or your fraud systems. It has to take into account these initiatives, the APIs, the open banking PSD2 initiatives. And that is where we see technology and technology providers like Volante playing a big part, trying to enable a seamless journey through this whole real-time payments PSD2 interconnectedness.
Thank you. I'm conscious of the time, so we've got maybe time for one, maybe two more questions before we have to wrap up. The next one I'd like to perhaps ask if Marco might take a first stab at it, but of course Carl and Nadish, if you'd like to have a go after, that'd be great. The question is essentially one of several that says, how do you ensure RTP is a success when it's launched in the country? Are there particular activities or patterns that say what makes a scheme successful or perhaps less successful? And given how many countries HSBC is involved in instant payments, so just wondered, Mark, if you might have a view if there's any common factor, or if it's a case of it's a story unique to each and every country.
Well, every country is, of course, slightly different, but I would say one of the key factors in extensive and early adoption has been when the regulator has been intimately involved in the decision making. I mean, you can't take away in India the fact that all the 500,000 rupee notes were removed from circulation around about the same time as UPI was launched. So that was a great impetus, I guess, to having a cash alternative solution. But in all seriousness, where you see the regulator come in, and it tends to be in more developing markets, I hasten to add, but they say this is the standard that needs to be adopted, and there's a very aggressive timeline to it, and everyone moves to that. That's been one of the key success factors in extensive adoption, I would say.
Great, thank you. And so one last question before I think we might have to wrap up, and unsurprisingly, we've had a couple of people asking around distributed ledger technology, blockchain, and things like that, and whether that might be the path forward for instant payments. I know I certainly have an opinion, and I'll share that in a second, but I don't know whether Carl or Nadish, you have a particular view on that.
Yeah, this is Carl. Yeah, I'll take that quickly if Nadish wants to add anything. For our view on distributed ledger technology and blockchain when it comes to payments is kind of the following. There's a lot of hype, a lot of talk, a lot of money being invested into that area. And when it comes to the payment space, the reason we would see a jump to that is if you're going to get an added benefit. Are you making a payment faster, more efficient, adding transparency, reducing risk, some of those things that would warrant, a big change in the way banks are processing transactions today. And I think in certain markets for domestic payments, the countries that have already rolled out some version of a domestic real-time payment system, the room for improvement has really gotten down to, there's not that much room left. If you're doing something that's, a couple seconds, it's real time all the way through the settlement notification and availability, and you're down to, pretty minimal cost. What's the added value of moving to something? Now, when we look at cross-border payments and the challenges we have there, lack of transparency, speed is very inconsistent, fees can vary greatly, high cost, high manual effort involved in repairs and things of that nature. There is a lot of room for improvement there, and I think that's why we're seeing a lot of proofs of concept pop up for global cross-border payments, exchanging cryptocurrencies between global banks, global partners, and leveraging it there because, going back to our comments earlier, for kind of a global real-time payment mix, it's going to be very complicated to stitch some of those systems together and get consistency on a cross-border scale. So I think there's opportunity there, and I think we're seeing that in a lot of these POCs that come to market. And, they're very early, so we'll kind of see how they pan out. But that's the exciting part, which is, can blockchain and DLT provide a benefit on a cross-border scale, whereas most domestic markets are probably saturated in terms of how far they can go.
I would echo that sentiment exactly. It's almost exactly what I would have said myself. There is great potential in the cross-border space, and certainly a number of our clients are using it to do instant cross-border real-time payments. But again, it's the volume rather than speed that is the key criteria in choosing which rail to go through. Where it's complex, it makes sense. Where it's throughput, perhaps it's not there yet. That said, when we talked about it in only 2 or 3 years ago, it seemed a long way off then. So who knows where we'll be in 2 or 3 years' time. Now, I note the time, and I made you a promise at the beginning of the session that I would make sure we finished on time so you could move on to your next meeting of the day. So I'd like to now wrap this up and make sure we thank each of our speakers, Nadish, Marco, and Carl, for their time and insights. And of course, thank you for joining us today. And with that, I'd like to thank everybody for the time and attendance. We wish to speak to you on a webinar soon. Thank you.